Our top story this morning, the U.S. Federal Reserve has cut interest rates by a 1/4 percentage point for the second time since July as concerns grow about a potential global slowdown. Fed policymakers also left the door open for another rate cut this year if the U.S. economy loses steam. President Trump, no fan of the Fed or its chairman, immediately weighed in with a less than glowing assessment. Seung-jae starts us off.
Following a two-day policy meeting, the U.S. Federal Reserve announced Wednesday it was cutting its benchmark interest rate by a 1/4 percentage point to a range of 1.75% to 2%. The cut comes just 7 weeks after the Federal Open Market Committee went ahead in July with its first rate cut in 11 years. President Trump, who has been pressuring the Fed to take more sweeping cuts to make the U.S. economy more competitive, immediately took to Twitter following the announcement, saying Fed Chair Jerome Powell and other Fed policymakers had again failed to meet his expectations. However, with 2 more meetings this year, analysts predict at least 1 more rate cut, potentially totaling 3 or even 4 this year alone. During his press conference on Wednesday, Powell echoed those predictions, saying the Fed could make 1 or 2 more small cuts in the future.
As our statement also highlights, though, there are risks to this positive outlook, due particularly to weak global growth and trade developments. And if the economy does turn down, then a more extensive sequence of rate cuts could be appropriate.
Despite the latest cut, Fed policymakers were sharply divided over whether to hold or continue to gradually reduce rates. The division comes amid mixed views on the relative strength of the U.S. economy. With unemployment at a 50-year low and rising wages, U.S. consumers have continued to spend money. However, unresolved trade negotiations between the U.S. and China have weakened business investment and put the brakes on the U.S. manufacturing sector.
We're not forecasting a recession, but we are adjusting monetary policy in a more accommodative direction to try to support what is, in fact, a favorable outlook.
For the time being, Fed officials still forecast moderate economic growth and a strong market going forward. They remain hopeful that inflation will rise closer to their 2% target, a level it considers healthy for the U.S. economy. Seung-jae, Arirang News.